Hey, welcome back to the Mining Pod, y'all. We've got Tyler Page, CEO of Cipher, and we've got Chris Totin, the Chief Construction Officer of Cipher on. We're recording this live from Bitcoin 2025 in Las Vegas. If you're here, you know the vibes are insane. It's a place for trouble. Maybe not the best place to have a Bitcoin conference at an all-time high, but also maybe the best place. It just depends on how much people decide to lose at the craps table, you know? Today's show is brought to you by Fractal Bitcoin, but we'll learn more about them later in the show. For now, let's get right into it. Just to start, can you give our listeners a little bit of background on yourself and Cipher? I'll start with you, Tyler, and then we'll move to you, Chris.
Sure. So myself, Tyler Page, and the CEO and founder of Cipher. Prior to this, I had a Wall Street career on the sell side and buy side. I was a day one employee at NYDIG, so got full-time professional in Bitcoin in 2017. And then Cipher was my sort of second large company foray in the space. We started Cipher in 2021, went public on NASDAQ as really a Greenfield development company. And among the large public miners, we're probably best known for being very savvy on the power side. I think we're known as generally among the publics having the cheapest cost of electricity. It's about 2.7 cents per kilowatt hour across our portfolio. That really drives a lot of what Cipher does. And I'd say over the last year or so, the company has also gotten very involved in aspirations for the HPC space and has acquired quite a deep portfolio of sites in Texas where we're very live and active trying to get into that business.
Yeah, Chris Totin, Chief Construction Officer. I think I was Cipher's 8th employee. Started in November of 21. And prior to Cipher, I was building data centers for Vantage and for Google. And I've put, I think I'm at 928 megawatts of data center capacity across several markets. Obviously, a lot of tier 1 data centers here with Cipher, but was building tier 3 data centers prior to that. Also built several gigawatts of combined cycle power plants with Fluor as an EPC lump sum contractor prior to that. Did a big petrochemical plant with ExxonMobil in Saudi Arabia. Built a city from the desert up in Qatar. And then built roads and bridges prior to that, as I'm a civil engineer out of the Texas A&M. And yeah, that's the brief history.
Yeah, interesting path to find yourself in a Ponzi industry. I say that with all love because my father-in-law still thinks that what I work in is completely fake. But
yeah, well, I like to think that we take the Ponzi out of Bitcoin mining data centers. You know, we myself and our operations team all came out of the hyperscaler space. That's actually where I met all of them, was on the Google program. And we build tier 1 data centers. You know, we don't build crypto farms. We take a lot of pride in having leveraged the skills and experience that we had made in the hyperscale space. And that's both on the construction and the operations side. Folks might have seen that we recently received our stamp of approval from the Uptime Institute. I think that we're the only miners out there that were able to obtain that. It's a very rigorous process. Your site comes under high scrutiny from a very skilled group of folks that come out and audit basically every single possible function in your facility. So we like to think that we're raising the bar.
Yeah, for sure. And it goes without saying because we host the Mining Pod, but I personally believe that Bitcoin mining is like the least Ponzi aspect of the Bitcoin industry. I mean, you can look at maybe some of the public companies and the way they advertise certain things, and that's a little bit less so, but it feels better to me looking at allocating to a company like Cipher rather than just like buying strategy shares outright for these kind of financial engineering games. You know, a lot of people think it's like some gigabrain strategy. Maybe I'm just a smooth brain, but it's not as exciting to me in terms of, you're issuing convertible debt or you're issuing equity to buy Bitcoin. I mean, that's great, but when you look at some of these mining farms and what they can do to the grid and how they're advancing some of these really kind of cutting edge, energy management plays, it's just a completely different thing in my mind.
I think it's, as someone that really enjoys thinking about strategy, it's one of the most interesting businesses on earth because it touches so many of these issues that are like front page of the newspaper every day. what's going to happen to the grid, what's going to happen with AI, supply chains, tariffs. Like it's a constant sort of chessboard to think about things. I think sometimes the public's you have a broad audience, everything from people that are, plugging in their first rig using a bid axe, to obviously people that run hundreds of thousands of computers. I think what's interesting is like the big public side, one of the reasons that sometimes it gets besmirched or falls under that broader kind of umbrella where people ask, is this a real business? Is that it's just very, very hard to debt finance big, expensive CapEx projects. And this is one of the only industries in the world where you spend hundreds of millions of dollars to build this giant physical thing that Chris and his team spend 18 months perfecting and constructing. And it's basically not debt financed at all. It's pretty much all equity financed. And so as a result, what happens is the cheapest cost of capital is often like issuing ATM shares. And so lots of companies use that a lot. It is a cheap cost of capital. For better or worse, some people make that strategic decision of like, we're just going to go all in to get as much scale as possible. And then traditional investors, I think, look at the space and say, well, how do you buy a stock if they're going to triple the share count? And the answer might be that's because they're building a bunch of scale at the cheapest cost of capital. That's not how we've done it. But I think lots of folks in the space, I think when it does get besmirched on those sort of questions about, is this really a scheme? It's understanding that this is a growth industry where access to capital is one of the big keys to success and strategy.
And do you think that's changing in terms of how miners have more access to, fundraising or capital avenues now? Because as you said, traditionally, equity financing has been the easiest lever for them to pull and also the cheapest. Debt is often pretty high for miners. Like the interest rates are crazy, especially when the Fed started hiking rates in 2022. Things like ASIC finance-backed loans just completely have like disappeared because there's just no way to service them because the debt is too high. Is that changing at all? Do you think that this is something that's getting easier for miners, or is that also a part of the AI HPC equation because your ability to actually access cheaper debt is much better when you have what people would consider legitimate data centers, right?
One of the reasons that investors value a stream of revenues from an HPC tenant in a different way is that it's financeable. It's not the only reason. I think people view it as so much less volatile than Bitcoin, hash price might produce for you. But a big part of it is that it's financeable. These astronomical sums that are needed to build tier 3 and tier 4 data centers like Chris has built and like we're looking to do, takes the cost up to many billions of dollars. And so realistically, like you're not going to equity finance that much. I do think it's changing a little bit for Bitcoin miners in that the last few years, really the last halving, kind of separated. And again, I know you have a broad audience, but I'm just talking about sort of the public miners with aspirations of running an industrial scale thing. The last halving and since then has really been about scale, and it sort of shook out smaller names, and some names fell off if they didn't have good sort of price economics in their business margins. I think there are a lot of names out there that are now, you've seen some of our competitors have said, hey, we're backing off on further growth in our mining hash rate for a while. And I think a lot of the view is they stepped on it with a lot of equity to try to get to scale. And now the story's kind of like, and now we can be more disciplined. Cipher's always been a little bit more conservative, I'd say, with it. I think the view is like, we're super bullish on Bitcoin. We like mining. It's a very volatile business. If Bitcoin goes up a lot, Cipher's going to do very well. Everyone's going to do very well. If hash price kind of leaks and doesn't do that well, Cipher's very strongly positioned because we have low electricity costs and we're run a little bit more conservatively. Like there's plenty of juice on the upside when the big payoff comes. And so I think fair to say among the big names, I think of us as being run a little bit more conservatively. I do think, back to your original question, a lot of our competitors are now operating with a little bit more of that mindset. Like maybe it's not growth at all costs. Let's be thoughtful. And then more broadly, like, are there other ways to finance it? Yes. I mean, we did a convertible. I think lots of our competitors have done convertibles. That's a very kind of growth company appropriate way to raise capital. A little bit better understood by traditional investors. Someday I would like to think that the debt financing markets will come back. The challenge was always with rig loans that it's sort of wrong way risk on the collateral, that right when the business is challenged at servicing the debt, you're seizing collateral that's not worth enough to make it worthwhile to sort of offset the unpaid debt. Maybe in a future world where Bitcoin volatility is a little tamer, that comes back. But I think certainly everyone's fingers are still a little singed from 2022.
Yeah, you saw just these crazy headlines of, hundreds of millions of dollars in ASICs being recouped. And like you said, they were worth much less than they were when people bought them in 2021 when they were selling it. Like, S19s went for, I think, like 12 grand a pop at that peak. And that's just crazy. And going back to, I want to zoom in on the conservative comment about some of Cipher's growth strategies. And then I want to pivot to AI and HPC. Cipher is kind of rare with some of the major miners in the sense that you guys actually sell your production to help fund operations and to make sure that you can build cash for future expansion and stuff like that. Wondering what kind of a double-edged sword that may or may not be, because, before the ETFs, you saw investors allocating to Bitcoin miners as kind of a proxy Bitcoin play. And, a lot of them like to beat their chests, like Mara, with having huge hodls. But that comes at the expense of shareholder dilution, because the only way that they can finance that is if they just continue to print some of their stock and sell it on the open market. So what's the strategy with selling the Bitcoin outside of the obvious, because you can actually fund your operations? And have you found that it in some ways is beneficial for doing that, but also maybe at a detriment of you can't say that you have the biggest Bitcoin stash, and maybe some investors are looking for that kind of exposure?
Yeah, I mean, listen, I think investors are fickle, and sort of the shiny thing right now, and certainly at this conference, is the barrage of treasury companies. I've never really understood why miners are quasi-religious about holding every Bitcoin or selling every Bitcoin. It's a very liquid instrument. We have always modeled our treasury management approach after a mature commodities company. And so I always think of, like, if ExxonMobil produces a bunch of oil and they sell some in the spot market and they put some in the terminal and they sell some futures against their production and hedge. And we do the same thing. So if you think about our business, we produce Bitcoin every day. In order to produce that Bitcoin, we incur a fiat liability in the form of electricity costs every day. And we have a really nice margin business because we have those low electricity costs. But so generally speaking, we'll be selling some Bitcoin that we produce every day. Not necessarily every day, but philosophically it sort of ties out to every day to at least offset that liability that we've incurred in dollars and we know we're going to send off at the end of the month. Okay. So then the question is, beyond that, what do you do with what remains? Again, we generally run a hedge portfolio on a piece of it. So typically anywhere from 10 to 30% of our portfolio is hedged. We do that with things like hash rate forwards. We'll often sell forward production, not for a lot of our production, but for a portion. We'll also do typically like zero cost collar kind of hedges or put spread collars where, we're constructive on the price of Bitcoin, but maybe we don't think it's going to absolutely blow off top, go to $200,000. And if it did, we'd be happy to sell it above spot. But geez, we'd love some protection on the downside if something happens. And often those trades are done around like known events. The approval date for the ETF, the presidential election, a big Powell commentary day on interest rates that could have a violent swing. We'll often do hedge portfolio. And again, we spend a lot of time thinking about managing it, and some of that is discretionary, so it's sort of 10 to 30%. And then building up a stash of Bitcoin is also part of it. It's sort of the equivalent piece of holding it in the terminal. We obviously have a market view. Sometimes we'll feel comfortable selling a little bit more or something opportunistic. So when we bought the Barber Lake site, it was largely funded with a big sale of Bitcoin. And the view was, we thought the price of Bitcoin was going to go up, but we thought Barber Lake was even more valuable. So we were sort of exchanging one valuable thing for another that we thought was more valuable. And that's how we run it. I mean, I think that actually drives the most value. Like we said, cost of funding is cheaper if you're borrowing against Bitcoin, for example. Selling hash rate forward is a way to basically effectively get very cheap financing with zero counterparty risk, because we're sort of paid the Bitcoin up front and they're relying on us to repay it with hash rate over time. So always looking to be creative on that stuff. And I think there's a happy medium. I know we produced some numbers in the first quarter showing that our approach in the quarter outperformed a hold everything strategy and a sell everything strategy. So, that won't always be the case. There'll be times when I'm sure we'll underperform, but generally it's served us very well.
Yeah, and it's nice to have that certainty and that money in the bank. I'm glad that you mentioned something like Exxon, right? Because in no other commodities business are the commodity producers just hoarding everything that they produced with the hopes that number will go up and that people will buy their stock because of it.
And it gets back to that conservative approach in the sense of there's plenty of juice in Bitcoin prices without doubling up by having all your treasury sitting in the commodity you produced.
Right.
Again, what that also means is that if Bitcoin goes to $200,000 next week, a lot of our competitors should outperform us. That is not, if you want to day trade, we may be less attractive as a stock to day trade in the space. I think we're more attractive on a long-term holding basis.
Miners, are you ready to earn more with what you already have? That's what Fractal Bitcoin is for, scaling Bitcoin with Bitcoin using a fully compatible recursive design. In just 7 months, Fractal's hit 18 million users and nearly 2 billion transactions. Fractal's cadence mining reduces up to 50% of your pool fee. No new hardware, no extra energy, and it's easy. FB rewards go straight to your existing Bitcoin wallet address. Over 90% of Bitcoin's hash power is already merge mining Fractal. Get more from the same resources. Start on Fractal today.
And so speaking of your comment of Barber Lake being the better investment versus Bitcoin over time, I'd love to tag Chris in, maybe to talk about this a little bit. What updates can you give us on Barber Lake outside of what y'all have published in your most recent investor presentation? I believe, if I recall correctly, y'all purchased the site in January?
No, we bought it last September.
Last September? Okay.
Yeah.
I'm probably mixing up my news items. So y'all bought it last September. How's progress coming on the site? And do you have any timeline for completion that you could share?
Well, right now we're in the planning phase. So what we've been doing is we've been running a number of test fits. So we have a wonderful working 3D model that we've been playing around with and basically trying to configure the site to be as agnostic to the various technical requirements that we're seeing from different customers as possible. Because there is quite a bit of variability. Anything from, both on the electrical and the mechanical fronts. So if we were to plant our flag with one specific hyperscale customer and start pushing design too far down the line, but then another customer comes along and, they start being kind of the front runners as our tenant, I don't really want to consume too much of the team's energy and really focusing on one particular design. So we're trying to do things that are as agnostic as possible.
Yeah, based on our discussions, a site with something on it already is actually less attractive to a typical hyperscaler because there are design particulars for each of them. So rather than building up, what is at Barber Lake is we have tons of land in a very favorable location with access to water and fiber that's needed in a fully built electrified substation, 300 megawatts. So it's sort of in that sense, it's a perfectly set up blank canvas. Yeah. And then Chris and team spend a lot of time answering to technical design requirements and requests with the various potential tenants we're speaking to, which is a fair amount of work. Because if there's a list of, how many... Think about some of the variables that come up in some of those. Think about how many, 400 variables. We've seen some crazy numbers of things, right? So,
there's 400 variables that we're trying to solve just on supply chain alone. Because one of the things that we'll try to do is, again, going back and trying to identify, and I'll just give you one particular, case here where we're looking at a number of different chillers. Chillers are ranging, we got air-cooled chillers, we have water-cooled chillers. On the air side, we're looking at, something like a 500-ton air-cooled chiller. On the water-cooled side, we're looking at a 2,000-ton chiller. And what we're doing is we're having conversations with our partners in the manufacturing space and basically trying to set up supply chain paths for the top ranking scenarios that we see playing out. Right. So I'll probably be looking at between 3 to 5 different possibilities for each equipment type and starting those conversations early with our manufacturing partners, because when the time comes and the deal is signed and the lease is executed, imagine the barrage of activities that take place on that day. So to the extent that you can set yourself up for all of those purchase orders that are going to be written, all of those notice to proceed letters that are issued to your contracting partners, we try to pre-position ourselves to get as much done on day one as we possibly can. So it's just a lot of gearing up, and I call it getting in prone position, ready to pounce on all of the work streams that are going to be released upon that big signing day.
So going back to this idea of trying to make the site as agnostic as possible, what are some of the different needs of these customers, the best that you can say? I mean, is this the difference between building like an AI center for inference versus training? Is it, are there other considerations? Like, can you add some color into exactly what the different needs are and for which use cases?
Well, what's interesting is that when the customers come to us, often, it's probable that they may have an intention for what application they intend to deploy at that site. But I think that the front end teams, the new site development and these upfront procurement teams that are going and sourcing new sites, those folks are not always plugged into what the business is seeking. Their job is to go out there and to find sites that, maybe agnostic is not the right term, but to find sites that may be suitable for either application. We're setting up our sites such that, at least from our perspective, we think are going to be suitable for both applications, training and or inference. What we're seeing on the technical requirement side is not necessarily two very distinct brackets of technical requirements. They're not coming and saying, hey, use this list if we're going to go inference and use this list if we're going to go training. There may be some onesie twosies that end up surfacing once they've decided which way they want to go. Maybe it's an extra, maybe it's additional fiber. Maybe they want a little additional connectivity to go and hit certain, fiber markets, or maybe they want a little bit more, maybe they want to drop their supply water, their chilled water supply temperature a little bit, or increase flow rates nominally for that specific type of chip that they'll be serving. But I think those types of things are going to come out in detailed engineering. Right now we're working on kind of just getting, I'll call them the basics. It's not basic stuff. This is, really big pieces of infrastructure. But I imagine we'll be dialing those in as we get a little bit further down the path.
So it sounds like sometimes it's not even just that the application of the HPC or AI load is necessarily different, but just how the teams want to manage it might be different in terms of how they want to cool it, the things that they're okay with on that front, kind of the nitty gritty of the engineering stuff.
And this gets back to why it makes more sense not to build something on spec, because you can get radically different requirements. Someone might, if, for example, we have had one potential tenant say they want to do full evaporative cooling, and one say literally the opposite. We do not want evaporative cooling for different motivations. So that's something that obviously has like tons of downstream knock-on effects, and not just the physical and design infrastructure, but like the lease and pricing and things like that, because you're radically shifting PUE and sort of number of megawatts that they're paying for under the lease in terms of critical IT load.
Yeah, and it's interesting because it's the AI and HPC industry seems to be moving so quickly. There's something new every day in terms of a breakthrough from NVIDIA or a new model. I think it was Zach Bradford of CleanSpark tweeted once and pissed a bunch of people off. He said the H100 is the next S17. Whether or not we agree with that, I do think it's kind of honing into something about the fact that when you're building these data centers, you have, couple year timeline potentially to get it off the ground. And by the time that you have it set up, the landscape for the hardware that's available or what is needed on that side could just be completely different.
But that's really the case for any piece of hardware. I mean, look at back in our day, Nintendo to Super Nintendo, Super Nintendo to Sega Genesis. I mean, they were doubling the bits, right? 8-bit, 16-bit, 32-bit, and so on. So, I mean, that game's we've been playing that one for a long time.
Playing that since the first Legend of Zelda.
Yeah, I was just about to say nothing beats 8-bit Legend of Zelda.
It's still a classic.
Yeah.
Total side note, one of the hardest games I've ever played.
It was the greatest.
It's crazy how much more difficult the games were back then. I think part of that was also they're trying to sell you the game guide before the internet came out, But when you go back and play something like that, and you play a new game, you're like, man, they're kind of dumb these things down. I feel like
they kind of let you just walk through the whole story.
just going God mode way too quickly.
Totally.
Well, it's not a video game podcast as much as maybe I would like it to be. IGN, hit me up. But going back to building one of these things out, and you've kind of covered some of the complexities already, but curious from your end, Chris, what are some of the design challenges when you're building out a data center for AI HPC load tier 3, tier 4 versus a Bitcoin mine?
And maybe contrast it because Chris is just finishing construction of our new flagship Bitcoin mining data center, which is at Black Pearl. So maybe think about Black Pearl and even like to set you up, as a company, I think about the progression of the design of our data centers from our flagship right now is at Odessa. It's a containerized data center. It's all air cooled, et cetera. Certainly a lot of lessons learned in the way we think about it. Black Pearl has been designed differently, and Black Pearl shows very well to the more traditional data center crowd, but maybe give context for AI HPC, but also kind of lessons learned and cutting edge design on the Bitcoin mining side.
Yeah. I mean, look, I'll start by saying that our approach doesn't really change. And there's so many reasons that it doesn't change. I mean, because we treat our facilities like, tiered data centers, we'll be using a lot of the same partners. For example, the same engineering companies who helped us design our Black Pearl facility will be supporting us in Barber Lake or whichever HPC AI facility that we do. We'll take the same approach to modularity. We run a very robust modular game. I think I'll toot our horn a little bit. Back in 2023, we won Project of the Year from Advancing Prefab because of our modular approach to our Odessa facility. We built a 200 megawatt facility and we were ready to start mining in about 9 months because of our approach to modularization. That's kind of part of our game plan, is that we have been building up towards this moment with the partnerships that we've established, and we have been getting them ready for what will become a more complex build. I mean, let's be real here. A tier 3 data center is going to be more complex than our tier 1 facilities. And a lot of that has to do with the additional, redundant systems that we've got to go put in place. Your big UPSs, your big generator packages. That's a lot of equipment to be moving around. It's a lot of labor to get those tied into facilities. And so, but again, we're looking to the same strategy where we'll be leveraging offsite facilities, folks that specialize in those scopes of work. And they produce that work in areas of the country that has a high density of skilled labor that specializes in that scope. And so we kind of, we shift the burden to those high performing facilities. And so when they come to site, we're able to use a much smaller labor force to integrate all that equipment onto the site. And that's actually really it's part of the magic, because as you probably know, the construction workforce is a very challenged industry right now. We are, the data center business is growing at, some say 12% year over year, 30%. I've heard a lot of different figures thrown around, but the construction labor workforce is not growing at that rate. In fact, it's only growing about 1% year over year on average over the last 5 years. So you think about the amount of work that's coming out just in Texas alone. There's 397 gigawatts of generation in queue over the next 5 years. So the generation work is going to continue to go crazy. We put 12 gigs on ERCOT just last year. That number should hockey stick growth we're talking about, because granted, some of these projects won't see the light of day, but if they did, that's 75 gigs of new generation a year over the next 5 years. So we're talking about orders of magnitude change in terms of, and that's on the generation side. On the load side, you've got 80 gigawatts roughly in queue. We've heard rumors that it's about 50 gigs of data centers in queue. Again, some won't see the light of day. They put 4 gigs of new large load on ERCOT last year. And now I think they're tracking to about 8 this year, last I saw. We're seeing the numbers start to creep, but we don't have the labor force. So we have to go and find opportunities outside the state and in high performing, highly efficient groups of folks that are capable of churning out high capacity in a short amount of time.
Yeah, because that's the other part of the equation too, right? You mentioned that 1% figure, and that's just for all construction. That's not including, data center people who have that kind of expertise. You're not going to have a guy who's built a hotel, contracted out to build a tier 3, tier 4 data center.
Well, what we did is what types of labor do you have in Texas? You have the oil and gas industry. That's been a staple of that state for a long time. Those guys build, and I can speak to my experience in Saudi with Exxon. Those plants are way, way, way more challenging and complex than data centers, like orders of magnitude. They are. I'll give you an example. On our project in Saudi, we had 30 ExxonMobil American guys that were sat on site, and they each controlled a very discrete part of the process of this plant. So I'm talking about 30 heavy hitting, $1 million guys a year that were sat on that site for 3 years and monitored the construction of their portion of the build. So it's extremely complex. So anyway, they're very capable and they are very good at, doing, large scale complex builds. So, part of our strategy was to tap into that. And so we had a lot of success, and one of our best performing contractors was an oil and gas contractor that has just made. And I was talking to our superintendent earlier today, and he was just saying how much he enjoys doing the work with us, because it's just, he says his words were, it's just good, clean work. It's there's high throughput because they're doing a lot. They're getting a lot done every day. They're working mostly on the ground. They're not up in the trench. They're not up in pipe racks. They're not, contorting their bodies all over the place. So, so that's been part of our success factor as well.
So moving on to another site that y'all have under development currently, and that's Stingray. Can y'all tell us a little bit more about that and whether or not this will be HPC focused, mining focused, hybrid?
I think it's going to be a really interesting thing to watch how that site goes, because it'll tell you something probably about the development of the HPC market. So it's set to energize next year, kind of mid to late next year, Q2, middle of next year. It's 100 megawatts. So, and it's pretty remote. I mean, it's out near the New Mexico border. So what's interesting is it's probably too small for hyperscaler interest. Generally, they're looking for 150 plus in our discussions of megawatts. We have had some interest from some potential HPC enterprise clients, that because often the way these discussions go is we're trying to find people that want a big site. When we sort of successfully give an overview and they want to get a little more serious, every one of them wants to see your whole pipeline. And so Stingray is next in terms of timing beyond Barber Lake and Black Pearl this year. It's 100, so that turns some people off. We've had some other people think, again, like kind of big enterprise type clients and developers that may or may not have some of those potential tenants, like kind of friendly relationships with them, going shopping for those sites. So we'll see. It's early days. We do have at least one very credible name kind of sniffing around Stingray. It's still early. I think it'll be an interesting swing site in that our first choice right now for all the sites in the pipeline is if we can find a high quality HPC tenant and build a data center for them. That's our preferred use case for the sites. All of the sites in our portfolio would also make excellent Bitcoin mining sites in that they're in Texas and we can actively manage curtailment to monetize it and buy cheap energy, and do things like ancillary services and other ways to defray costs. Stingray would be a great Bitcoin mining site too. We got the site really cheap. I think for now we're focusing on making the site more valuable by moving forward with getting a substation set up on time to do whatever we want, because that infrastructure is valid for either use case. And then beyond that, we'll continue to have discussions around potential HPC tenants. If we get further along and it just seems like, this site's a little too remote, doesn't tick enough boxes for enough potential use cases, that would probably be more likely to be a Bitcoin mining site.
Speaking of those discussions with HPC tenants, how did y'all broker those? How are those deals done? Who is approaching whom? That to me is one of the more interesting aspects of these pivots for Bitcoin miners, because the business development for a pure play Bitcoin miner is making sure that you can get in the infrastructure and get in the ASICs, but you always have a buyer of the hash rate, either directly to the network or to the pool. It's not the case with HPC and AI. That's like another level of complexity. So how are those conversations getting started?
Sure. So there's no one way they get started, and I'm sure other companies, I don't know that our experience is representative, but for most of my career, I've raised money, put deals together. I often tell people I was the first person to pitch Bitcoin to some of the world's biggest investors, Ontario Teachers, Abu Dhabi Investment Authority. I did the first meeting about Bitcoin at Skybridge, which is now like a crypto company. It was a fund of funds at the time. So, I've always been aggressive at trying to get in front of people that didn't want to meet with me at the time. So I think we have advisors, we have a team. We obviously have a lot of people that are ex some of these shops, so we network into them. Yeah. We have had approaches come inbound. Listen, we got in front of the investor leading the biggest data center project of all time in Tokyo. I think we're scrappy. I think that is, again, we went public with 2 employees and a PowerPoint deck at a $2 billion valuation. So, I think, we can tell a convincing story, and we've backed it up, right? We've executed to deliver on that. So, but it is early days. Again, there's no question that CoreWeave Core Scientific deal last year was a shot across the bow to a lot of people to think about, wow, there's probably something more to investigate here. Since really that transaction and looking at the dynamics for available power, we have seen power as the bottleneck. We've really positioned the company to be in front of that now with 11 data center sites in Texas that will all be electrified by the end of 2027. So we've made a big bet on the desire for these large interconnects in potentially non-traditional areas. And that's really where the industry is right now. But so it's a combo platter of, figuring out ways to get in front of people.
You're feeding me my questions as you give answers. This is the easiest interview in the world for me. You mentioned, one of the largest investors in Project Stargate. I assume you're talking about SoftBank. How did that investment in Cipher come about? So SoftBank, for those of you who don't know, invested $50 million in Cipher through a private placement. What engendered that conversation? How did that surface?
Yeah, so I'm going to be respectful here of NDAs and so forth, so I can't get into every grisly detail. But we have some really good investors on our cap table. One of the investors on our cap table has a good relationship with SoftBank, knows our story very well, and I think when they were thinking about grander ambitions, last year in the space, put us on their radar and connected us. And I spent some time in Tokyo with Masa and team, and it's sort of one of the great professional honors of my life to say that we have an investment from them. It's amazing when you're in that office, in the room you're sitting in. There's a picture of 2 guys in that same room, sort of looking at a phone like this, and you look a little closer and you realize it's Masa and Steve Jobs, and he's showing him the prototype for the iPhone. And you're thinking, wow, this is a pretty cool room to have a chance to sort of pitch your story. So yeah, I mean, they made an investment in us for $50 million. There was a stretch where they had an exclusivity on Barber Lake. That exclusivity has expired, but we're happy to have them on our cap table. If Stargate starts signing new data center leases tomorrow, I'm assuming we'll be on the list of people they'll talk to. They haven't signed any. I mean, obviously they're working on the big project that was contributed to the Stargate portfolio. But yeah, I mean, that's how it came about. I mean, just big professional network, and then a chance to sort of meet them and understand what they're hoping to do.
It's pretty crazy to see the headlines like that drop, because you had the Stargate project news drop, and then there was, these kind of breadcrumb trails of Lancium and Crusoe's data center that was getting built out, and their and the interest from Oracle as being a tenant. And I saw Cipher mentioned in one of these headlines, and all of these dots started connecting with these companies that, just quite frankly, during the last bull cycle, people wouldn't have fathomed that they'd be in the same conversation with some of the most heavily capitalized companies in the world and some of the leading tech and hyperscalers. Kind of to pivot into another question with regards to strategy on the HPC front, and then I have one more question, and I'll let y'all get back to your business here. But when y'all are thinking about how to just tackle this beast, because it's a huge beast to tackle, as we've been talking about, what made Cipher decide to go the route of just greenfielding some of these data centers versus taking like a retrofit approach like Core Scientific? Because I've seen pros and cons for both in terms of people commenting on it. There are people who swear that the retrofit can't be done and that it's kind of a fool's errand. And then you see a company like Core Scientific, spending billions of dollars of CoreWeave's money to do something like that. So what are maybe a better way to ask it, or like the pros and cons to both, and why did Cipher decide the greenfield approach specifically? So
listen, some of this is thrust upon us. It's not necessarily an active decision, and then I'll let Chris comment on some of the technical elements of this. But the story with, I think, any of these companies looking at the portfolios of Bitcoin miners, I mean, to state the obvious, who are the people out there getting giant power interconnects before large language models? Bitcoin miners. Right. So you've got a site, it's got a lot of power. That power is pumping today. Today, the number one desire of these big potential tenants is speed to market. How quickly can I get electrified? We've all seen different articles about, the queue is now 5 years or longer to get a new interconnect. And so, the whole thing underpinning this look at Bitcoin miners from an HPC perspective is maximizing, or I should say minimizing, time to market. So if you're sitting on a site already, and again, it's an old Bitcoin mining site, retrofitting it, you've already got power. That may be the fastest way to get ready. And keep in mind, there's like retrofitting and there's retrofitting. That retrofitting is not like, we tweak some of the racks and we're good to go. Like the power's there. I mean, retrofitting could mean like literally flattening the site and basically rebuilding it. But the advantage is that the power interconnect's already there, and like the substation's there, and everything works from the getting power to the site aspect. So then when it came to Cipher, we found these sites with big interconnects available right away or soon. The sites that are already in our portfolio are not as natural because they're either the geography is not perfect, there's not a lot of acreage, or we have a lease and a PPA. And so it's not like we own the site forever. And so leases need to get renegotiated. And a lot of that then flows through to, can you debt finance the site? We own the minority share of a joint venture at some of our data centers. So that's not necessarily, we're not calling the shots there. I mean, we may be from an operational standpoint very involved, but strategically, not as much sense. So within the context of our portfolio, we didn't have obvious sites like, oh, you've been running old S9s at that site and it's near a big city, just tear it down and make it HPC. For us, it was about acquiring sites that had favorable characteristics. I mean, you want to talk about retrofitting?
Well, yeah, I was going to say, our first sites were very much so purpose built for Bitcoin. And that, while we may have had some conversations about ambitions of doing tier 3s one day, we were very focused on optimizing for Bitcoin and solving that challenge.
And saving money. I mean, not cutting corners, sure, but being thoughtful about CapEx to maximize your ROI.
Absolutely. And solving for the curtailment thing that people were still figuring out and all that stuff. So at Black Pearl, we've taken a different approach. Obviously, while the facility is highly modularized, they are not individual modules like our Odessa facility. In designing that facility, we actually put quite a bit of thought into how would we perform this retrofit if that day were to come. We sat down and had those conversations and made some very deliberate design decisions that didn't cost us a lot of money, actually. And that was one of the cool challenges that we faced, were how do we set ourselves up for a potential retrofit without dumping a bunch of money that may never, have a return on its value. So at Black Pearl, I like to say we have a really cool design that's going to be wonderful for Bitcoin. And we have a plenum that doubles as the hot owl containment for the exhaust air from the Bitcoin mining machines, but it also serves as a corridor for the chilled water headers that would one day be pulled in to serve the liquid to chip GPU racks. And our hot owl containment system is very well suited for about a 20 rack GPU pod complete with, it's 8, network racks in that pod and a bunch of in-row cooling units. So the IRCs, these aren't CRAWs, these are IRCs. They're cabinets that push cold air into the cold aisle. So we actually have a really, I think, a thoughtful way of transitioning the site, and have done a number of test fits that have been very successful and very well received by the hyperscale community.
So stay tuned, guys. Maybe a retrofit in Cipher's future. You're not saying it. I might be saying it. So last question, and this feeds well into it. What's the end game here with the HPC and AI pivots? I mean, is there an argument to be made that all of your favorite Bitcoin miners who are doing this, if you're an investor, are one day just going to be traditional data center companies?
I don't think so, but I think there will probably be some. I mean, you need to tick a lot of boxes to make that transition. You need skilled people like Chris, leading your construction efforts. You need to be very professionally run. Again, right now, speed to market is the advantage of the Bitcoin mining companies, but and this reminds me of the early days of pitching Bitcoin to traditional institutions. Like, even if there were people that thought it was a good investment that was going to go up, they didn't want to have to get questions about it and explain why they were doing this kind of adventurous thing. I think a little bit of, like, imagine if you're a hyperscaler and you're someone there that's in charge of signing up new data centers. If you sort of take the plunge, I mean, look who has taken the plunge. It's CoreWeave. They were a crypto miner once upon a time. They're used to being on similar sites. They kind of get the joke. Like, I think they've had a window into the future of how things could be integrated. So they're a natural frontier species. OpenAI is out in Texas, again, in a non-traditional location. They have a speed to market story as an incredible growth company, right? So it's advantageous to kind of be moving fast. Now think about a traditional hyperscaler, the multi-trillion-dollar market cap. If you sign up a data center that's a little bit adventurous, it's in a new location, it's not in a major metroplex, and it's one of the biggest projects you've ever built, and it's with a counterparty that, again, some Bitcoin miners are, there's a lot of stories around what's happened, how did they survive, how did they come to market, what's turnover in the management been, what's their history of being sued, like whatever, like all things that are somewhat natural for kind of frontier businesses. But if you're now signing up to work with that partner and the CEO now gets a question at the next press conference of her earnings call, like, how are you guys working with Bitcoin miners? Like, they just don't want to answer the question. So I think, it's natural that there will definitely be some winners. I think you need a professional team. You need access to capital. You need to be pretty buttoned up in how you operate things. And I definitely think some of them will. I don't know that all of them will.
Anything to add, Chris?
I mean, I can only say from my personal prerogative is that I would love to be part of both spaces. As an engineer, I want to do things that add value to society. I think that's what we're doing in the Bitcoin mining space, and obviously the adoption story there is continuing to tell that narrative of how it's benefiting folks globally. And I believe the same thing in the AI space. I want to be part of that ecosystem. I want to do those big projects. I want to be on the critical path and doing a very new and innovative thing. That's just how I like to operate. So, for those reasons, I hope that we get to, split time between those two applications.
Understand. Okay, I cheated. Last question, I swear. So in terms of splitting time, a thesis that has been presented, or rather a hypothesis, is this idea of converging both AI and HPC on the same site. You have this idea of, like, maybe you're running inference model and you are, not having as much demand on it, and you can boot up your miners so that you're not losing revenue on the megawatts that you have allocated. Or maybe you have a client that's training a model and then they have, a period of time where they don't need as much of the compute load. And so then you can spin up Bitcoin miners to soak up that energy. How feasible is that strategy? Because it seems like maybe you throw containers on the site and have its own dedicated infrastructure, but is this actually even possible?
I would go so far as to say that I think it will happen, and be maybe even potentially widespread. I'll throw another way that I don't think you were necessarily thinking of it as well, which is when people talk about PUEs, that's typically a peak PUE. And most of the time there's excess power available than what's being run on the HPC side. And so all the sort of tricks that you learn to curtail your data center in response to price signals in Texas, you can imagine the same sort of thing looking at like the variability of the power draw and what is excess to be soaked up. So as Bitcoin and Bitcoin mining gain broader acceptance and broader understanding, it's a complete natural fit. We have thought a lot about this. Black Pearl is a site that we're currently marketing the second half of the site to HPC tenants. So that will be, I hope, if we get the tenant to the finish line, a live action demonstration of this. And it may be one of those things where I think very few tenants on the front end are going to request that. Or if, again, most of these guys want like the most comfortable. How do you make this look like the other data centers we used to sign up? Of course, the problem was those were 30 megawatts and in Northern Virginia or something like that. So they're trying to apply that to 300 megawatts out in West Texas. In the same way, they want things simple. I think that site could be an amazing test case for this. How do you think about innovating on that site?
Well, and I want to go as far to say that we have an active pilot where we are testing this capability. Obviously, we have wonderful patents that support this process and how we call it power tranching, and how we point the electrons to different tranches of load. And I'm super excited about it. We did about 2 months ago. We received our first HPC rack, which we're standing up at Black Pearl. That rack, we use that rack to support our mostly our power monitoring algos, which are very sophisticated. We didn't get a lot of time to talk about those today, but I wish we had.
Yeah, I mean, we have our own rack we use because we need to predict power prices ahead of time in the market. We do quite a bit of hedging and trading and power price optimism. This is why we have the best cost of power in the space. And so, yeah, I mean, we have our own in-house AI rack to predict power prices ahead of time in ERCOT.
That's pretty cool. Killing two birds with one stone. You get to pilot this thing, and then you also get to use it for business.
Exactly. And so, and business and for piloting cool stuff like, running a hydro miner and GPUs on the same rack with the same mechanical loop using two different sequences of operation. And so, along with our power prediction suite and stack, I'm hopeful that the AI community starts to embrace some of the hard work that we've done in that space on power optimization and compute efficiency. Because I think there could be a day where, the checkpointing of GPU workloads are synchronized with grid conditions, and we're able to, modulate and to affect change on the GPU workloads in alignment with grid conditions. And just like what we've been doing in Bitcoin mining, there should really not be any hindrance to doing that. And there's incredible amounts of power cost savings potential. But anyway, I'm excited about this pilot because I there's a phenomenon. It's not really a phenomenon because it's kind of something that we're observing. It's commonly referred to as AI load bursting. But this is happening when you have your GPUs that are running at full tilt, running a workload, and the workload is dropping off. And so you're seeing, just gigantic sums of power dropping instantaneously, which puts a lot of stress on your upstream infrastructure, puts a lot of stress on the grid. There's some very interesting products that are being developed by the Schneiders, Eatons, Vertivs of the world to try to protect the equipment from doing that. But we think that there could be, a world where the Bitcoin mining machines step in to absorb some of that impact, as opposed to pushing it into capacitance or supercapacitors that might be built in row to absorb that shock. So, yeah, I'm kind of hopeful.
There's a lot of open space there. It'll be interesting to see how things play out, but I do think there's a natural convergence.
Yeah, it's going to be an interesting few years. Super exciting time. Well, Tyler, Chris, thank you so much for joining.
Thanks, Colin.
Where can people learn more about Cipher and what y'all are doing?
You can go to ciphermining.com or follow us. I think it's at Cipher Inc. is our Twitter handle. I'm on there at RF Tyler.
I'm mostly on LinkedIn. You can check me out there, Chris Totin.
Need to get you on Twitter, man.
I'll make the plunge.
I appreciate it, gentlemen. Thank you so much.
Thanks, guys.